Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Monday, October 31st, 2022. Happy Halloween. Here's another happy for many of you, I assume. We're going to continue the daily Tesla report through November at the very least. We're considering adding it as a kind of a permanent feature. We're just not sure yet. But because of the continued growing popularity of the daily Tesla report, we thought, why, shelve it. So we're offering the daily Tesla report. We'll be providing it every day on YouTube through the month of November, possibly through December. We'll let you know about all that. We're also adding the daily Apple report for the month of November. And so, if we continue Tesla, indefinitely, say through December and January and so forth, we will have at least a second one that we will rotate. So Apple for November, and then presumably in December, for instance, Amazon. I'm not quite sure what it'll be, but we're doing Apple. So check that out. We'll be doing a daily Apple report as well. So for those of you who follow Apple, trade Apple, it's one of the more actively traded day trade stocks in the known trading universe. So I'm sure you're well aware of that. So I just want to make that announcement, and I appreciate your following the Daily Tesla Report. We really appreciate all the views that we're getting. Please click like each and every time you watch the Daily Tesla Report, and subscribe if you haven't to the Wicked Stocks YouTube channel. It'll prize you notification each and every time new content has been uploaded. So now for the month of November, at least 2 uploads a day: Daily Tesla Report, Daily Apple Report, and more. So there's that, and please share these videos with your friends and colleagues. It really helps us out a great deal in being found out. Anyway, let's jump to, I think we'll jump to this chart. This is pretty simple and straightforward. That daily channel top that we settled above barely last Friday and held on Thursday. We broke below on Friday, sort of a washout there for any new long entries, I suspect. We did close, though, not only above the channel top at 221.45 today, but also higher on this the highest settlement we've had actually since that low was put out last week. So this basically maintains the buy signal that I'd mentioned played out last Wednesday when we settled above that a pretty simple descending channel top. This is a setup for a bull move, still in play above 221.45, still anticipating continued recovery over the next 2 to 3 weeks into the 260s, that 264.40 to 267.52 area, which is a new descending 1/3 speed line based on last week's low and the November all-time high projected off of that point. I should show how to construct these. I probably will create a video here in the next week. There's no secret to it. It requires some how should I say, some manual work. Very few software programs have it built in, and so I don't want to get too into that. I just want to mention that 267.52 is a trend-defining long-term resistance level that can contain buying on a monthly basis and quite possibly through the balance of the year. So we're expecting the 260s above 221.45. So let's work up from there. You can see I've got the support and resistance here. 234.31 is an intraday resistance area, and that is this former trend line coming off the August pullback low and the early September pullback low. It can contain intraday buying pressures. We also have, there's a horizontal line here that I'm not really labeling, but that is 229.82. It'll still be, well, it's lost its significance as of last week, and I'll get to that in a moment. So it's just a minor point. Above 221.45, I think you should anticipate 234.31 today, where we can top out on an intraday basis and perhaps fall off from there again. If we push through 234.31 today, and with this present volatility, it is quite possible. And if so, we can run all the way up to 243.93 on an intraday basis if we push through 234.31. Keep in mind that holding above 221.45, we should reach 243 into the 240s this week anyway. And as I mentioned earlier, the 260s over the next 2 to 3 weeks. 243.93 is a simple rising channel top on the daily chart that is based on activity going over the last week. We have the move low. We've got Friday's low against this intermediate Wednesday high. You could construct this on a 30-minute or a 60-minute graph, by the way, and probably fine-tune this area for day trading. But 243.93 shows up on the daily chart as one able to contain daily buying pressures. And, given if we happen to test that today, that is such a big move that we could quite easily fall off of that for a day or two. But I don't want to weight it as a 2-star resistance. I really think that mid 260s is likely over the next 2 to 3 weeks. And if we were to settle above 243.93 today, which is a long shot, but if we did, under that kind of volatility, we're just a few days away from reaching this targeted 264.40. So know that closing above 243.93 maintains the sort of hyperbolic accelerated upside pace that would be the state of the market short term if we were to close today above 243.93. And once again, it becomes an intraday objective if we push through 234.31. All the minor points have been carefully chosen, by the way. They all relate to some level on the chart, or maybe they're minor Fibonacci points. But in any event, big picture, holding above 221.45. I'm going to say over the next 2 to 3 days, 243.93 in reach, and over the next 2 to 3 weeks, 264.40. And last thing I'll say about the upside, once again, pushing through 234.31, 243.93 in reach on an intraday basis. So let's take a look at the downside here today. That once again, if we break or open below 221.45, this 212.04 downside, 5/8 Fibonacci is in place. In play. 216.20, by the way, 216.35 was Friday's low, and that was a 50% downside retracement. 220.35 is a 3/8, just so you know. I'm going to keep 220.35 here just for day trade purposes, but it's so close to 221.45. I do like to keep these levels 2 to 3, 3 to 4 points apart. I have the sort of rule that I like to follow, average daily range, and that you can divide that range in thirds. So if the average daily range, for instance, is 10 points, you want to keep your minor tradable levels every few points apart. That's just the way I like to do it for daily chart day trade purposes. But breaking, especially opening today below 221.45, 212.04 in reach, where we can place a daily low. And if we close back below the 221.45 formation, as I was saying last week, that failure to follow through on a classic buy signal into the 260s carries with it weighted trade into later week, implications for continuation back into this long-term support region, which is still sort of calling the market like a magnet. It's not destined to test it, but I do believe that if we close today below 221.45, then yes, over the next 2 to 3 weeks, the 174.78 to 183.18 area, long-term support region, able to contain selling then through the rest of the year and quite possibly through the first quarter of next year. On the way down, we of course have 204.85 to 204.99 to 206.85, and I do have that. Where do I have that shown here? I know I spent a little time labeling that. Here we are. 204.99 is the low settlement price. And that is a Friday settlement because the weekly chart also shows that as the low settlement price. So 204.99 to 206.85 I have here as a 2-star, meaning we can bounce off of here for 2 or 3 days. But if we close below 221.45, I think the clock is ticking where we should actually continue south into the mid 170s to low 180s as I showed earlier. I'm going to finish with just a quick thought on, this is the SPY weekly chart. The SPY actually tested this speed line, descending 1/3 speed line last week. This is trend defining. We actually we tested it on Wednesday of last week, fell off nicely, and then came back to close at it on Friday, meaning no long-term buy signal yet in the SPY. It's at 387.18 the entire week. So keep that number in mind. If the SPY closes above 387.18, even on a daily basis this week, Monday, Tuesday, Wednesday, that's an intra-week buy signal, but we really don't have clarity in terms of a long-term buy signal for the SPY unless we close above 387.18 on Friday. And then I think the 430s to 440s, there's other things going on up here, would become a realistic 2 to 3, 3 to 5 month target. Let's talk, last thing I'll say, is the Q. And this obviously is heavily influenced by Tesla. The Q has yet to retrace up to its significant long-term resistance. Because it fell so much further over the last year than the SPY, its descending one-third speed line is 298.97, preceded by this long-term rising two-third speed line that held the June lows. If you were a Triple Q subscriber, you'd know about this area, held the lows. We'd recommended this as a buy zone back in early summer, resulted in the August rally, and then we closed below it about a month and a half ago, setting off a sell signal. That sell signal is still in play. But it hit a Fibonacci area. I don't want to get into that. I would invite you to take a look at our Triple Q analysis. We do it every day on wickedstocks.com if you're interested. We also do the daily SPY report. We put both of those out every single day, part of our premium content on wickedstocks.com. But the last thing I'll say here is the Q remains on its heels. It can rally short term. This is a near-term counter-trend rally right now for the Q. It becomes a real long-term rally if we can close this week above 298.97. This area narrowing, and over the next couple of weeks, all comes together in the mid-290s. Big, big test for the Triple Q. And if it can get up and over this area, I would suspect that would be in line with Tesla closing above the 260s. This area here. I think that would be probably, they would probably line up pretty well at the same time. But I don't really want to go there. I'm already 11 minutes into this video. I appreciate you watching. We'll continue the Tesla report through November at the very least. Please watch the daily Apple report as well. We need followers on that. Tell everybody about it. And we'll be back tomorrow with Tuesday's daily Tesla report.